Poor AMD stock, down pretty big, 4% after hours, which is, in my consideration, relatively big. What's going on with this company? Well, obviously they reported earnings, so we're going to take a look at that. Just a little snippet of it. Down 4.5 now. Pretty big drop. We'll look at and see what this earnings has. So if we look at just the stock itself, if we're considering about the stock, right now, you don't like what's going on with the PE ratio on this company. Right now, around 109 or 190 PE ratio. If we talk about effects from this current outbreak, usually the high points, we'll go from the high points, which I think is relatively unfair, but February 19th for this company, down around only 5.7% since then, but year to date, this company is actually up around 13% still. So this downward move isn't crazy when you think about how it's reacted to everything going on. This is a stock that, if you look at back, let's say low points in 2017, has risen about 440%. That's pretty massive. So obviously the other valuation we look before we take a look at these earnings is going to be the forward PE ratio of this company, which is a little bit more fair, around a 50. Price to expected growth of only 2, so not awful. But if we look at these earnings, AMD posted a non-GAAP EPS of 18 cents. Not that pretty. GAAP EPS of 14 cents. The company's not mega profitable, and I think that's one thing you can notice. So you take that as you will, but they have gone a big way to increase profit over the years. So revenue on this company, $1.79 billion, in line. Their EPS was in line, and their revenue is in line. 40.9% increase year over year, though, in terms of revenue. That's massive. And the shares were down because I think shareholders were expecting a big beat. And you see that in the valuation of the stock. When you're trading at a PE ratio of 190, you're expecting a big beat. Now, that's no shocker. We didn't get the big beat, so investors are kind of selling out. They were a little bit disappointed. We look at the fine details, obviously, here. We like to look at the fine details. So AMD sees some near-term demand uncertainty. That's part of the issue here. They meet the street estimates, but warn about near-term demand uncertainty due to the impact of the virus. Computing and graphics revenue grew 73% year over year, but down 13% quarter over quarter. Again, I don't know why they mentioned this. As I mentioned in my Google analysis here, quarter 4 is going to be the biggest quarter for these tech companies. They always are. So I just don't see why that's even relevant. To say quarter over quarter down. Of course they're down quarter over quarter. Quarter 4 is a massive quarter for them, and quarter 1's not going to be as big. Even if they grow, as they did 73% year over year, nearly doubled. My gosh, that's crazy. But quarter over quarter, you're expecting a downward move. You just are. That's just how it works. So to 1.44 billion, driven by Ryzen processor and Radeon product channel sales. So obviously gaming's big for them, and that's one thing that I really mentioned when I talk about this stock. If you compare it to other chip stocks, there's a reason why it kind of gets this valuation that it does. So because of the pure power of Ryzen processing and Radeon products, gaming is massive. They have such a massive exposure to gaming, and with gaming on the rise right now, you see the stock kind of didn't care about what was going on. It kept rising up. It was up this year for good reasons. So people thought that since they have more gaming exposure and more, gaming is a bigger thing right now just due to the fact that people are stuck at home. People are upgrading PCs, stuff like that. So AMD sees some demand increase, but they are concerned about what might happen. Some uncertainty is what they have. So enterprise, embedded, and semi-custom revenue was down 21% year over year and 25% quarter over quarter to $348 million due to a lower semi-custom sales, which were partially offset by high EPYC or EPIC, as we might say, processor sales. Quarter 1 adjusted gross margin was 46% versus 41% last year, so a growth in that is nice. They are giving guidance, though. That is pretty crazy. The company's actually giving guidance. revenue expected of 1.85 billion versus a 1.9 consensus, so they don't meet consensus. So you expect the stock to go down a little bit, plus or minus 100 million. Will still not reach their consensus. Gross margin of about 44%, which is a little bit lesser than this quarter, so not the most exciting thing ever. So we also see, despite expectations for weaker consumer demand in half two due to the virus, AMD guides full year revenue growth of 20 to 30%. All things considered, when you see a year over year of 73% growth earlier, and really 40% for the whole quarter in terms of revenue, you expect a little bit more than the 20 to 30%. Now, that's not like it's not massive growth, even in the middle of a nightmare, but you expect their business to actually grow a little bit more during this. They're a company that actually should see an increase more than they usually do because of this. So that, I think, has investors shook just a little bit. That is definitely a shock to investors. I think that's why. If we're looking, obviously, we go right on their investor relations page, and we're going to look, oh, that's right. That is right. We're going to click right on this lovely first quarter 2020 results. This is what we care about here, okay? So if we're looking from a operating expenses perspective, which we looked at revenue of 40% year over year, gross margin definitely up. You gotta love that. Operating expenses, you see they definitely were up $98 million in terms of operating expenses this quarter versus last quarter, or this quarter last year, I should say. And quarter over quarter, you saw $40 million from quarter 4 of 2019. So net income did rise 146 million quarter, year over year perspective. From quarter over quarter, they were down 8 million. Not that bad, but definitely a big increase year over year, which is what you like to see. EPS was up 13 cents year over year. Again, this company used to be less profitable, and that's why the shares have gone up so much recently, because they finally found a way to find that profit where they didn't previously. So that's why these shares have risen so much. Definitely a good year-over-year growth when you think about how small that EPS line is right now. Definitely something you like to see. Very good stuff. Obviously non-GAAP, I don't care as much about it. I look at the GAAP stuff. So for non-GAAP, though, they're still reporting similar numbers, but from a non-GAAP perspective, in terms of net income, quarter over quarter was a massive decrease, but non-GAAP, I don't, it's fine to me. Gross margin, 46%, up 5 percentage points year over year, 1% quarter over quarter, primarily driven by Ryzen and EPYC processor sales. Operating income was 177 million, compared to 38 million a year ago, and 348 million in the prior quarter. Pretty not good in terms of the non-GAAP perspective, but nothing too crazy. Cash and cash equivalents and marketable securities were 1.4 billion. We're going to take a look at that balance sheet. You already know we are. Computer and graphics segment was up 73% year over year. Good stuff. Revenue was higher year over year, driven by strong Ryzen processor sale and Radeon product channel sales. The quarter over quarter decline was primarily due to lower graphics processor sales, as I mentioned. Obviously, during the quarter 4 time, we're talking about Christmas period, everything going on. You're going to see a lot more demand for tech companies. You just are, no matter what they're really selling for the most part. Client processor average selling price was up year over year, driven by Ryzen processor sales, which are a little bit higher margin and a little bit higher in terms of price. So good for them. Client processor average selling price was down slightly quarter over quarter due to higher notebook sales versus processor, as you see. So GPU average selling price was lower year over year and quarter over quarter due to product mix changing up a little bit. Nothing too crazy in terms of that. So in recent highlights, AMD detailed its plans to drive the best-in-class growth and financial performance through high-performance computing and graphics leadership, and aggressive technology investments, and sustained execution of its Financial Analyst Day on March 5th, 2020. AMD further strengthened its position as a data center compute and graphics processing solutions leader with the new design wins and cloud deployments. One thing that I think is interesting there, we talk about data centers and cloud. There was always this debate between Intel and AMD. Intel's actually shown a little bit more improvement than AMD has. Everyone thought AMD was taking over everything. I don't know. But you see overall in terms of what kind of deals they have going on, Google Cloud and AMD announced a new Google Compute engine, N2D virtual machines. Microsoft became the first cloud provider to offer virtual machines powered by, that's right, the second gen AMD EPYC processor and AMD Radeon Instinct GPU. IBM Cloud announced it's enhancing its global infrastructure with the second gen AMD EPYC processor, and AMD announced 3 new second gen AMD EPYC processors that deliver per core performance leadership for database, commercial high performance computing, and hyper-converged infrastructure workloads. So pretty intense stuff. They continue to build momentum across consumer and commercial notebooks. Good stuff there. AMD and its game console partners share new details and specifications for its AMD-powered Microsoft Xbox Series X and for the PlayStation 5 consoles. And they announced forthcoming AMD RDNA gaming architecture will support Microsoft's new DirectX 12 Ultimate API. Big stuff. They announced a fund here that's donating $15 million of high-performance systems to accelerate medical research related to the current pandemic. Interesting stuff. So you never know about that. So weird stuff. We talked about the outlook, and I really want to talk about what we're looking at is finally the good stuff. The good stuff known as the balance sheet, right? So we're looking at this far left corner, this far left side. Year over year, you saw a decline actually in cash and cash equivalents. From a total current assets perspective, they have a little bit lesser, talking about $200 million less in terms of current assets. But on a total assets perspective, again, you're sitting right around $200 million less. Nothing major. From liabilities, total current liabilities actually a lot less, pretty much half of what they had in terms of liabilities. They pay down a little bit of debt actually in terms of accounts payable. Decent bit there, so they only have $1.9 billion in terms of current liabilities. Not bad at all. So not bad at all. So overall, we see total stockholder equity is actually positive here. So they actually have more assets than they do in terms of debt, which is nice. So this company's good in terms of balance sheet. My concern is how do they increase that profit from here? We want to see increased profitability to warrant that PE ratio right now. It's a little bit high, but I get why. People are really excited about the future of this company, and I think they'll be very successful in the future. I don't know if these levels at $55 a share are the right time to buy. I think under 50 might be the right time to buy, but definitely interesting going on for this company. Interesting stuff. I hope you enjoyed.